Here's a quick video to explain why I think that TripAdvisor stock is an excellent buy for the beginning of 2022. Now, this trade has a lot to do with the diminishing effects of the Omicron variant and the overall reopening of the economy, but that's only part of this story. You see, one of the reasons I've been so optimistic over the last several years is because of all the productivity improvements that are being derived as companies learn to better adopt and apply technology. And so what I say in this video about TripAdvisor applies to most of the reopening stocks and the reopening trade that I talk about, but it's also more than that. It's about the adoption of technology and how it's making companies more productive. Now, in a nutshell, here's what I mean about TripAdvisors. If you look at the stock pre-pandemic, the price of TripAdvisors had started to drop long before COVID hit. And in fact, if you looked at an even longer term chart than what I have up here, you would see that the overall peak from TripAdvisors as an IPO happened several years before. The stock had been in decline for quite a while, and that's because it was stagnating in both the top and the bottom line, both in terms of sales and profitability. The stock had been in decline going back to at least 2014, 2015. And so the stock price was going through a period of consolidation. We can see in this chart that things did start to improve late in the year 2018. And so Wall Street started to like that. But the problem was that as management was reinvesting in the business, it also meant higher operating costs. And especially as that related to the new number of employees that were being hired to drive the growth. You see, TripAdvisor was looking towards the future, and they were hiring more employees so they could grow at a faster and more profitable rate. But over the short term, that meant a hit to the current year's profitability. And so long before COVID had even become a factor, the price of TripAdvisor stock was back in a decline. And so hiring all those employees in 2019 couldn't have occurred at a worse time. But here's the bright side of things, and this is where efficiency and productivity comes into play. Look at the drastic reduction in headcount that occurred in 2020 as TripAdvisor had to respond to the pandemic. They were able to react quickly and not only reduce headcount, they're able to produce the same level of customer service, but they can do it with a much more reduced headcount. This is where the overall productivity and efficiencies come in. They're going into 2022 and beyond, leaner and meaner, and that means more productivity in the future. This was a trend that was already happening, and that's especially true of companies that can not only profit from the reopen, but especially those that derive their profits from digitization of the economy. So I would much rather own a travel-related stock like TripAdvisor as opposed to a more nuts and bolts company like an airline or a cruise line. Look at a company like Delta Airlines. They have probably 30 times the number of employees that TripAdvisor does. They also have aircraft to maintain, crews to train, all the regulations of the FAA. A company like TripAdvisor essentially operates in the cloud. They can benefit from the reopening, but they have none of the overhead baggage that an airlines or a cruise lines would have. And so whether it comes to the reopening trade or the economy in general, productivity equals profits. And it's in those companies that you want to invest your money because that's where the most appreciated growth will come from. And so if you look at the price of TripAdvisor when COVID hit in the beginning of 2020, the stock price definitely fell apart. You can see this yellow area that I have on the chart is highlighted during that crash and then that consolidation which happened afterwards. That presented an excellent buying opportunity during the fourth quarter of 2020, and the stock price skyrocketed, getting way ahead of itself in the early spring of 2021, to which point it began to pull back, and I thought it would recover, but then the Delta variant came in and dragged the stock price lower throughout the summer of 2021, and once again it began to consolidate. I expected the price to turn around, but the Omicron variant dragged it lower. However, as bad as the stock has performed for the better part of 2021, if you did get in October or November of 2020, then over these past 14 months, the stock is still up some 35 to 40%. So it's still been an overall outperformer, I think because it's going into 2022, a leaner and more productive and efficient company, that the outlook over the next 6 to 12 months could be extremely favorable. Well, hey, as always, this is just my opinion. I do appreciate you watching. Until the next episode, as always, this is John Pugliano wishing you the very best returns.